Whether you're a new business owner or an experienced professional, these 7 key areas require your focus to ensure compliance, avoid penalties, and set your business up for success in the coming financial year. I'm Balaji, and today I'll guide you through the essential year-end financial checklist that every small business should complete. Before we dive in, why don't you hit that subscribe button? And let's just dive in. The first crucial task in your year-end accounting process is finalizing your salary and payroll reconciliation. This isn't just about making payments, it's about ensuring accuracy across your entire financial ecosystem. Start by comparing your payroll register totals, general ledger entries, and actual bank disbursements. Now, why this is important? Well, discrepancies here can lead to incorrect financial statements, tax calculation errors, and statutory non-compliance issues. Here's a practical approach. Create a reconciliation worksheet that matches each salary component from your payroll software to your accounting system. Check that gross salaries, deductions, and net payments align perfectly. If they don't, investigate immediately. These discrepancies won't resolve themselves. Remember, proper financial management starts with accurate payroll records, and the income tax department can cross-reference your TDS returns with your books of accounts during their verification process. The next thing in our compliance checklist is TDS Final Adjustments. Tax deducted at source is an area where every small business faces challenges, especially at the year end. Before March 31st, you need to reconcile TDS deducted from employee salary throughout the year. Ensure that Forms 24Q quarterly returns match your actual deductions, and verify that the challans that you paid align with both your books and the tax portal. A common mistake is overlooking minor discrepancies that compound over time. Even a small difference between your accounting records and TDS returns can trigger notices from the tax department. Here's a pro tip. Download your Form 26AS from the income tax portal and cross-check it against your internal TDS calculations. This external verification step can save you from significant headaches later. The final quarter's TDS return may require adjustments to account for any under or over deductions throughout the year. Don't leave this to the last minute. Corrections take time. The third critical task is to verify and log employee investment proofs. Your employees have submitted various documents claiming tax exemptions, but have you verified their authenticity or eligibility? Before finalizing the year-end accounting, you need to collect all the pending investment proofs from the employees. Verify each document's validity and relevance to the current financial year. Update your payroll system with the final tax calculations and log the investment declarations to prevent further changes. Many professionals make the mistake of accepting declarations without proper verification. Remember that as an employer, you have the responsibility to ensure reasonable care in TDS compliance. Consider creating a digital repository of all verified documents with clear naming conventions. This not only helps in current verification but serves as a valuable documentation if tax authorities request information in the future. Once verified, communicate the final tax liability of employees so that there are no surprises in their March salary, which is a critical aspect of managing your business finances effectively. Now, let's focus on the broader statutory compliance reconciliation. This includes Provident Fund, Professional Tax, Employee State Insurance, and Labor Welfare Fund. For each of these statutory requirements, you need to verify the amounts deducted in payroll match the returns filed. All challans have been paid on time. Employee and employer contributions are accurately calculated, and new employee registrations are complete. One effective approach is creating a monthly reconciliation tracker that you have maintained throughout the year. If you haven't been doing this, now is the time to renew all the 12 months at once. You need to pay special attention to PF contributions for employees exceeding the wage ceiling, ESI eligibility changes based on the salary revisions, professional tax slabs if your employees work across different states, and LWF, which often has different payment cycles depending on your state. Remember that non-compliance here doesn't just mean potential penalties. It can affect your employees' ability to claim benefits that they are entitled to. which impacts your company's reputation and your employee satisfaction. The fifth task in our year-end checklist is conducting a comprehensive payroll compliance audit. This goes beyond reconciliation. It's about examining your entire payroll structure and process. Your audit should check whether your salary structure complies with the minimum wage laws, if bonuses and incentive payments have been properly accounted for tax purposes, whether leave encashments have been correctly taxed, if reimbursements have adequate supporting documentation, whether prerequisites have been correctly valued and taxed. One often overlooked area in the financial year-end process is the proper classification of employee versus contractors. Misclassification can lead to significant compliance issues. Another common mistake is inconsistent application of policies across departments or locations. Ensure standardization while respecting the state-specific requirements to optimize your tax planning. Consider using a structured audit template or even involving an external consultant for an unbiased review. Fresh eyes often catch what we've been missing during the finalization of accounts. Our sixth focus area is employee advance balances. As you clean up your financial records for the year end, it's essential to have clarity on all outstanding advances. Create a comprehensive report showing all advances issued during the year, recoveries made to date, balance amounts outstanding, and recovery plans for the next financial year. For advances that will carry forward to the next financial year, ensure proper documentation exists, including signed agreements for the advances, established repayment schedules, and appropriate approvals as per your company policy. From a tax perspective, remember that interest fee or concessional loans exceeding certain limits may need to be treated as prerequisites. Ensure these have been accounted for in your tax calculations. Communicate with employees who have significant outstanding balances, as this affects their financial planning too and impacts your overall accounting accuracy. Let's address the documentation for employees who have joined or exited during the financial year. This is particularly important for proper tax handling and completing your end-of-year financial statements. For new employees, you need to verify that Form 12B has been collected if they have joined in the middle of the year. Previous employers' TDS details have been incorporated and all the statutory regulations like PF, ESI, etc. are complete. And for employees who exited, you need to ensure that full and final settlements are complete. Form 16 preparation is in progress. All the statutory deregistrations have been processed and exit interviews and documentation are complete. A best practice is maintaining a comprehensive digital employee record with separate sections for onboarding, ongoing compliance, and exit documentation. Remember that Form 16 must be issued to all the employees, including those who have left during the year. Missing this obligation can result in unnecessary complications for both your organization and the former employees, affecting your income tax filing process. Before we conclude, let's briefly discuss some strategic financial considerations that can significantly impact your business, especially at the year end. Now, these strategic financial considerations may include capital expenditure timing. If you're planning to purchase assets for your business, consider making these investments before the 31st of March to claim depreciation benefits in the current financial year. Cash flow optimization. Review your accounts receivable and payable. Consider expediting collections and optimizing payment timing to improve your year-end cash position. Loan account reconciliation. Ensure all loan transactions are properly recorded, interest is accrued correctly, and reconciliation with lender statements is complete. These financial practices not only help with compliance but also contribute to better business performance through improved financial visibility and effective tax planning. And there you have it, a comprehensive checklist with 7 key areas and some consideration that require your attention before the 31st of March. If you found this information helpful, please like the video and subscribe to our channel for more guidance on financial management and compliance. Drop your questions in the comments and we will do our best to address them. All of this payroll and compliance can be quite a daunting task for a small business, not just during the year end, but throughout the year. That's why KK manages and automates your payroll and compliance and ensures that you stay stress-free. You can sign up now from the link in the description.